Hey everybody, good afternoon. Welcome to 12-Minute Trading. My name is Doc Severson. Today is the 14th of July in 2025. We're going to be flying solo today. Dave's off doing business. So we're going to have a short session today because you don't want to hear me talking to myself. Unless you have questions, I'd love to take questions as we go through this morning's session if you're joining me live. Otherwise, if you're joining me through a replay, which is going to be most of you, let me know what you'd like to see in next week's session, or if you have any questions from what we talk about today. I am going to run over here to the S&P 500 charts, and what we have here is the fractal array, where we have the monthly, weekly, and the daily chart. And this is pretty much going along with what we've been talking about the last few weeks. We have a really strong monthly uptrend, which has been in play. You can see here back into 2018, 2020. We had a little bear market in 2022, which resolved back up to the upside. And we've had a strong rally since really the latter part of 2024, with a little bit of a tariff tantrum that we had this spring. And still we're printing new highs. So you can see all the way along here, this is classic Dow theory, higher highs, higher lows, higher highs now printed. And we don't know where the next higher low is going to show up. But right now the trend is still pointing higher on all time frames. Now the other half of the equation is the energy. How much potential energy does this have left to trend? Where we consider this to be a fuel gauge, where we have full on this study down here at the bottom, and then potentially empty. So we're not quite at empty yet on the monthly chart. So that still shows that the trend has further to go. So we don't time anything off of the monthly chart. We typically just use the smaller time frames like weekly and daily to understand the times here. Now, shifting over to the weekly chart, we have, once again, strong trend here with higher highs and higher lows. And we can see that after this big thrust off this consolidation, where we had 2 straight weeks in a row ripping to the upside for 400 points, we've gone into exhaustion again. So this is near empty. Now this can drift higher, but more than likely the price may end up going sideways. And this is what's been going on the daily chart for the past week or so. So after this strong move, it did transition into a sideways move. And we're still seeing that. And on the daily chart, actually, this has got still pretty good energy. Now, when we run into these situations where we have exhaustion on the weekly chart and we have a lot of energy on the daily chart, which we're close to, then a lot of times what will happen is we'll see a quick move down, and then we'll see that subsequent slingshot move higher. Now, one of the studies that Dave likes to look at is the Bollinger Bands. So if we look at the S&P on the Bollinger Bands, what we might see, let's see if I can expand this out just a little bit here so you can see this better. What we might end up seeing is these two coming together, and maybe a move back down here. At this point, it's around 6150, this center moving average. So it tends to get outside the bands and then come back down to the center in a strong trend. We had an upper band crawl, and right now, again, we're seeing sideways movement, but to speed up this consolidation, we may see a quick move down, and that could happen on any number of catalysts. So the big earnings start tomorrow with the big banks. Like we have BlackRock reporting tomorrow morning. We have JP Morgan reporting. We have Citi. We have Wells Fargo. So a lot of the other big banks, and we have our first tech stock coming out with Netflix on Thursday. So lots of things that could potentially move the market or could introduce uncertainty to it. One of which would be Jerome Powell being relieved of duty. Now, supposedly he can't be fired, and he's been really prickly about saying, well, I'm going to serve out my term. But there could be the case of mismanagement right now. The optics look really, really bad for the Fed. And, they're just they're going in a different direction than the rest of the administration. So they're definitely out of sync with things. So you can make a case one way or the other that maybe they're doing the right thing, but in either case right now, it does not look good. Does not look good. And there could be some repercussions. And I think that would come into the market as uncertainty temporarily, because what I think would happen is if Powell is deposed, then I think what happens from there is Trump gets to nominate basically a rubber stamper. So somebody's just going to come in and rubber stamp whatever Trump wants. To some degree, that's what Powell was originally, 7 years ago when he came on board. And he's sort of formed his own kind of coalition at this point. So we'll see. I'm still looking for some kind of move. Now, it doesn't have to pull back, but this move is rather extraordinary with just how strong this has been. Actually, I've been saying lately that this is the strongest V-bottom off of a corrective pattern that I have ever seen in the last 20 years. And that's saying a lot. And that does kind of show that we're kind of in the end game here where things really, really, really get out of hand. And this is what always happens to bull markets, is they always get out of hand right near the very end. Now, I'm not calling a top here. I'm not bearish, but I am saying things are getting out of hand because I think they have to. I think they figured out that they can't cut their way to financial solvency, so they're going to have to grow their way out of it. That's really the only way that they can save this thing from collapsing, is to grow it as fast as they possibly can, right? So if we can't bring interest rates down, then, maybe we're going to have to, but, if this thing starts to grow, then, it may be somewhat reckless to drop interest rates because inflation's going to come roaring back again. But if we keep things artificially low, it could be an amazing period of time for a year or two until we get into real instability. But anyway, we're going to stay away from the politics here. We're just sticking with what I'm seeing on the chart right now. And this has been an incredible move from 4,800 all the way up to 6,300 or thereabouts. That's a big move, man. That is a big move in a very short period of time, just a few weeks. It wasn't that long ago that we were writing RIP, right? So the way that we were playing this back in April was when we got into this exhaustion, we said, okay, this is likely to bounce back up, but will it bounce back up to a lower high and then roll over again, or will it rip? And we kept our options open on that. Now it has done the rip, but what I did not anticipate was how strong this is going to be. A lot of people are sitting on the sideline waiting for that pullback, which has never come. The pullbacks have been so shallow right now. So that tells me when we do get a proper pullback, it's probably going to be a little deeper than we expected. So just for historical perspective, I tend to do this quite often. I play a little bit of a history minor here. If we go back to, after the pandemic ended, I mean, this was the strongest move to the downside we had ever seen in a short period of time until we had our little tariff tantrum. But notice what happened here is that we got some nasty shake and bake right when it looked like this thing was going to rip forever. And then that went nuts to the upside, and we had back-to-back 10% corrections. So that's how we kind of reset the market, hit the reset button on this thing. Okay. Guys, let me know if you have any questions, because I'm going to be done here in a couple of minutes. I do want to bring up our friend Bitcoin and cryptocurrency. This is Ethereum. Ethereum has had a nice breakout. Okay, but the real star has been Bitcoin by itself. So Bitcoin actually got up to my first target that I've been looking for the past better part of the last year. And let me explain this for a second. So what I saw back here, starting from the very top at the end of 21 all the way to this is a cup with handle pattern. This is a cup with handle pattern. And so as we got into, this is about a year ago, I said, oh, look at this thing. We've got a cup with handle pattern. And so a cup with handle pattern, if we take this from, let's say, approximately let's give it a different color here. If we take it from approximately the neckline down to the bottom of the head pattern, or the bottom of the rounded base, the cup pattern, and then if we append that, what we're going to end up with is about 122. So 122,000. So what I've been doing lately is talking about how I'm splitting up. I've been doing dollar cost averaging for the past 2 years. And my first profit target, where I was going to unload 1/3 of my portfolio, was 122,000. So we were picking up stuff all the way down here at 25, 26,000. And now we've gotten a 5X on that. That's good. My next target is going to be, if you think about this, we also have another fractal. So that's the big weekly pattern. We also have a smaller daily pattern cup with handle. So let's draw the measured move target for this one. And this is going to be about the same thing here. And if we take this to the breakout, we're going to find that this is going to be up near 145. So that is my second target. So my first target was 122. My second target for the second third of my position is 145,000. Will it get there? I don't know. I don't have a clue. So everybody seems to be very free and easy with their predictions about, Bitcoin 1 million and 200,000, and it gets a lot of ink, but there's never anything around it, right? So these are based on known chart patterns, and they tend to work out very well just because of all the psychology that's embedded. This is based on herd psychology, right? So first third, 122, second third is 145. I don't know how long I'm going to have to wait to get there. We will see. But if there's one thing I've seen with the cryptocurrency market is that the biggest regret that I see from people is not taking profits while things are strong. You've got to sell into strength because you never know when this thing is going to unfurl. It can happen in an instant. And like back here at the end of 21, after an extremely strong market, this thing fell apart literally overnight. And it was really, really difficult to go chasing this thing down the rabbit hole. And, admitting that we were caught long on the other side. So this time around, I'm like, nope, it's not going to happen. I'm going to take profits into strength on the way up. And so I may leave some money on the table. That's okay. Because again, I've learned from the past. The past has shown us that the biggest regret has been not taking profits when things are strong. Okay. That's all I got for today. So really, I'm anticipating a little bit more chop as we get into July. I'm anticipating a little bit more corrective action as we get into probably what will be some unsettling news that comes out with regard to the Fed, or it could be earnings, or it could be tariffs, it could be anything. Could be anything. It's just more of an excuse to take profits into today's market. So, but still, the trend is really good. Volatility, we've gone back to that quiet and trending character that is so powerful. All right, guys, that is it for today. I want to thank you guys for joining me, whether you're here live or whether you're here listening on a replay. And I'm glad we got this thing working again. Last week was a bit of a cluster. I had a power brownout like 2 minutes before we went live, and it just threw everything into a tizzy. So, all right, guys, thanks very much. Let's see. We will be here next week. We'll be here next Monday. So hope to see you then. Thanks, everybody. Enjoy the market. Bye now.